Have a pleasant stay. Today's class is accounting problems in internal reconstruction or capital reduction. I am Srimati from Dr. Ambedkar Global Institute, Tirupati. Let us start the problem. The balance sheet of Bluebird Limited as on 30th June 2016 is given below. So here is the balance sheet, liability side and asset side. There is an authorized capital and then issued and subscribed capital 15,000 equity shares of 20 each fully paid, 1,000 12% preference shares of 100 each 80 per share paid up, and 600 14% debentures of 100 each, bills payables, sundry creditors, outstanding debenture interest. On the asset side, plant, patent, debtors, bills receivables, stock in trade, cash at bank, profit and loss account, and preliminary expenses. All these are there. So let us see what are the adjustments. So a special resolution was passed and confirmed by the court to the following effect. So the scheme is that 1,000 12% preference shares of rupees 100 each, 80 per share called up, be reduced to 1,000 12% preference shares of 60 each and 40 per share paid up. So 20 rupees balance is there that goes to capital reduction. And 15,000 equity shares of rupees 20 each fully paid up be reduced to the same number of fully paid up shares of rupees each. So here 10 rupees goes to capital reduction. That 614% debentures of 100 each be reduced to 616% debentures. The interest rate is increased but the value is reduced to 90 each. And that the debenture holders to forgive the accumulated debentures interest due to them. So they said they don't want this debenture interest. And the sundry creditors agreed to forgo 20% of their dues and in exchange of equity shares of 80% of their dues. And then thus to sum up, the rendered available, whatever it is available in capital reduction to be applied as follows. The balance to the debit of profit and loss account and preliminary expenses account be completely written off. So it should be written off completely. The plant and patent be written down by 25% and 40% respectively. Since the values are very high, that should be reduced to 2. And then the balance left, if anything is there, then that should be carried forward to capital reserve account. This is the scheme. So here you are required to show the necessary journal entries and prepare the balance sheet of the company after reconstruction is duly carried out. Let us start with the journal entries. Bluebird Limited. So all the journal entries are 30th June 2016. Due to alignment constraint, I did it. And so 12% preference share capital account debtor 40,000. Then to capital reduction. That is 20 rupees it goes to capital reduction. So here 80 per share but 60 paid. So here 60 per share, 40 paid. So the balance 20 rupees taken to capital reduction. And equity share capital account, old value is 3 lakh. Then to equity share capital new value, that is 10 rupees each now. So 1,50,000 balance goes to capital reduction. So 15,000 equity shares of 20 each, that was in 3 lakh. Now it is reduced to 1,50,000. So 14% debentures account, 600 into 100, that is 60,000. Now 16% debentures of 90 each, so 54,000. So balance goes to capital reduction. Instead of 100, we are treating it as 90 per debenture. So outstanding debenture interest. So they are just forgo, no, they are just giving it up to the company. So it is goes to capital reduction. So cancellation of debentures interest under the scheme. So sundry creditors, they are also forgoing 20% of that interest. So balance goes to equity share capital and to capital reduction. So the value is 4,000 equity shares of 10 each they are paying. And here we have to calculate when you put capital reduction ledger account, you come to know this. To profit and loss account 99,000 and then to preliminary expenses, the expenditure which is in balance sheet 5,800 and plant value in balance sheet is 2 lakh. So we have to reduce 25%, it is 50,000. Then patent in balance sheet, it is 1 lakh. We want to reduce it by 40 percentage. It is 40,000. And then the total of this profit and loss account, preliminary expenses, plant, patent, rupees 1,98,400. That has been debit with capital reduction. So the balance amount which is left is 20,000. That is taken to capital reserve account. Surplus transferred to capital reserve account. So the balance sheet of Bluebird Limited, liabilities and assets are there. See, authorized capital, we are not touching it. Whatever it is authorized, we are keeping it as such. But issued and subscribed is changed. Before it is 15,000 equity shares. Now it is 19,000 equity shares of rupees 10 each. The same 1,000 12% preference shares. It is 60 each, 40 per share paid up, 40,000. The reserves and surplus, sorry, capital reserve account, which is from capital reduction, we are taking it. And secured loan has 600, 16% debentures of 19 each. The percentage changed, that should be kept in mind and should be recorded here. Current liabilities, bills payable. In case of fixed assets, plant before it was 2 lakh, now reduced with the depreciation, so 1,50,000. And patent, it is before 1 lakh, depreciated 40 percentage, so 60,000. Then rest of the thing is same, but it is here there is no profit and loss account and preliminary expenses, so that you will get the balance sheet tally. Hope you understood. Stay tuned until the next. It's bye from Srimati. Thank you.